If the president were to act in a relatively sensible way, I think there's roughly a 1 in 4 chance of a recession over the next year. And if the president were to continue to lean into full throttle Trumpism, trying to take away the independence of the Fed, getting our trading partners offside, destroying the bureaucracy, and instituting a form of crony capitalism, I think the chances of a recession over the next 12 months skyrocket.
Trump has claimed America has the hottest economy right now. Is that the case?
No. We've seen the most important economic indicator we have is employment growth. Employment growth has slowed very sharply over recent months. Probably you can date that to April. April 2nd was the day he promised to liberate the American economy. It seems that he's liberated us from jobs growth.
Can you provide some context about the state of the US economy?
Right. So Trump came to power. First of all, Doge started to cut a bunch of federal jobs. We've got chaos in just about every sector of the economy due to all sorts of actions from the president, not just tariffs. As a result, economic uncertainty is at an all-time high, or not right now. It's actually come down a little bit, but it's still at extraordinarily high levels. We've seen over the past few months, job growth has slowed quite dramatically. GDP is not currently a useful indicator because every time people worry there's going to be tariffs, there's a big import surge, and then that hollows out what would have happened the subsequent quarter. If you ask people if they expect unemployment to rise or inflation to rise, they say yes, and that's the only thing they're enthusiastic about. And businesses feel absolutely down about the economy. We still have a policy mess. It's not just tariffs. It's also uncertainty and, quite frankly, competence. You have the president trying to take over the Federal Reserve. You have the president firing the head of one of the major statistical agencies and trying to replace them with a partisan fool. None of this engenders confidence in the US economy.
Where does the US economy go from here?
Well, I'll tell you what I hope and I'll tell you what I fear. If I forecast the economy, that has to be some forecast about what I think the president will do. So let me back off from doing that and say instead, if the president were to act in a relatively sensible way, I think there's roughly a 1 in 4 chance of a recession over the next year. And if the president were to continue to lean into full throttle Trumpism, trying to take away the independence of the Fed, getting our trading partners offside, destroying the bureaucracy, and instituting a form of crony capitalism, I think the chances of a recession over the next 12 months skyrocket, maybe as high as 70%. And it wouldn't just be a recession, it could well be a recession accompanied by inflation as well, which is everyone's favorite, stagflation.
So is stagflation a realistic possibility?
Oh, we're already in the early days of it. Stagflation's two things. Stagnation. Well, already we're seeing the unemployment rate very, very slowly creeping up. The other part, inflation, already we're seeing inflation slowly creeping up. We haven't seen much of the effect of tariffs yet. What's happened with tariffs is that other countries aren't cutting their prices as President Trump promised us they would. Instead, they're keeping their prices high, which means American importers, the stores, are paying those tariffs. They haven't passed those on yet. They almost certainly will, and they will as soon as it becomes clear that these tariffs are permanent. But still, American tariff policy is on again, off again, and it may well turn either on or off again awfully soon.
Jay Powell has recently said that a weakening jobs market could temper tariff inflation risks. The market is expecting 4 more rate cuts in the next 12 months. What's your view on where rates could go?
All of this makes it very complicated for Jay Powell. When you raise inflation, you normally raise rates to counter it. When the economy slows, you normally cut rates to counter it. The textbook, in fact, says if it's a supply shock, it should be transitory. So maybe you should just look through it and hope it'll all go away. We just had an episode a couple of years ago where people talked about that word transitory a lot. And it would take a very brave economist right now to say, oh, it's just going to be transitory, and look through it. So the Fed is in a very, very difficult situation right now.
Trump has repeatedly attacked the Fed chairman. He's trying to remove Governor Lisa Cook over claims of mortgage fraud she denies. Is this just about rates, or is it about gaining control of the US Fed?
It's definitely way more than just a cut in rates at the next meeting. The governor that the president has tried to fire, Lisa Cook, is not only a friend of mine, but also a neighbour. Um, he's gone after her with, as far as I can tell, absolutely no legal grounding. He's been quite explicit that his plan is to stack the Fed with Trump folks. The problem with not having an independent one is monetary policy would be run out of the White House. The question there is, would you rather monetary policy be run in the best interests of the American people or President Trump's political interests? And in fact, it's a step worse than that. President Trump has very strong views about interest rates. He's a former property developer. Property developers love low interest rates. We've actually seen this play before. What happens when a populist strongman with a love of low interest rates comes to power and takes over the central bank? This is what Erdogan did in Turkey. So we've seen literally this movie before. And in Turkey, inflation went from pretty normal rates up to 86%. And last I looked, it's still in the 30s. Look, there's a lot of economic debates that come down to, can we be a percentage point better off here or a percentage point worse off there? But the most important thing in economics is to avoid a crisis. This sort of thing could create a crisis. This is where economics really matters.
Justin Wolfers, thank you so much.
Great pleasure.